Good morning. This is Paul in Houston, and this is the Pirate Traders Morning Show. We're starting off this morning looking at Forex Factory. And we see this morning, I don't see a lot being reported. Consumer confidence at 10. We'll see how that goes. Looking at the rest of the week, we've got oil inventories on Wednesday morning, some FOMC speakers. Thursday, unemployment claims, which they nailed last week, spot on. I've actually never seen them nail it to the thousand. And then on Friday, again, some price index information. But other than that, that's going to be okay. Just so everybody remembers, I sometimes forget, is Monday is Labor Day, so we're going into Labor Day weekend. So that's what's coming up for this week. Looking over at Market Watch, I see that every time I open this thing up, it tricks me. I see the futures are down slightly, looking for a slightly lower open at the moment. Crude oil has apparently calmed down some more. It doesn't seem to be worried about the situation in the Middle East between Hezbollah and Israel or Gaza, anything like that. The 1-year chart puts it just in a steady range. When I look at gold, you can say gold is going down, but Lordy, when you look at the 1-year chart, gold is going up. And so it's not going up quickly, but it's just continuing a steady rise, and I don't know when it's going to stop. I mean, if I look at the 3-year, I mean, it's just moving right along on up it as it goes. So gold is something to keep up with, I suppose. And so when I look at the European markets, I see them opening actually slightly up as opposed to the US. They're operating slightly up, let's put it that way. And we'll go to Asia. Asia is more or less mixed, but also Hang Seng and Nikkei are up slightly. Crypto, I'll show it to you. Charles will argue with me, but yes, I'll show you crypto. It's doing crypto things, but I don't understand. Okay. Okay. Well, no, I don't understand crypto. So there we have it. So I don't understand currencies. That's my confession. Moving right along. Off to Deutsche World. Germans today have been looking at, well, they're regularly reporting on the situation in Ukraine as well as Russia. And other than that, I mean, okay, I'm not supposed to say anything off, but the world's oldest sloth has died in a German zoo. I'm sorry, it's not a market thing, but I get distracted by little things like that. Other than that, no real market worthy news on Deutsche World. When I come to Al Jazeera, also I see about the same thing. I mean, the situation in Gaza is steadily reported. The situation with Hezbollah is reported. They will mention what's going on in Ukraine, but they'll also mention a lot of what's going on in emerging markets if emerging markets are your thing. So that's quite interesting for me occasionally to read it. Plus, they'll occasionally come up with commentary on things going on in the US. So that's what's going on there. Looking at Reuters, Reuters oftentimes will, Charles, there we go. I was I had my YouTube thing up and I had seen it was not moving, but never mind. I seem to be doing fine here. Um, Looking at Reuters, I mean, a lot of the same stories get discussed here. Apparently, it would say the Europeans are reacting to a rally in Japan on the Nikkei. Um, Oil is also, it's reduced its Middle East tension, so it's not really worried about what's going on in the Middle East. The dollar is flat. And one thing I was going to mention is that on here, oh, it's over here. I'm going to point out this. Deutsche Bank is actually recommending a short in the 10-year Treasury. That's really reasonably significant. That shows that at least somebody is making the case that the interest rate cut that we're all expecting in September may be tradable for some people. They really are expecting that this is going to really happen. And I can tell you it would be awful. It would be an awful reaction if it did not happen, because there's a lot of people that are depending on it, at least on a quarter point. A half point, I think, would be very aggressive given this the Fed chairman. I would be very surprised, but I think a quarter point's baked in. And other than that, the last thing I was going to mention is I've been looking at CME products just to understand what was going on a little bit more broadly than what I'm looking at on a daily basis. The ES contract itself traded 1.1 million contracts yesterday. That's kind of normal. It's normal. I mean, 1.1 is actually a little bit on the low side for ES. Over the course of the week, it's probably averages 1.4 million. It'll have a 2 million day from time to time. But the other thing I wanted to point out is there is quite a bit of options. There are quite a number of options are traded. E-mini options are traded over the course of each day on the CME platform. It adds up 100,000, 70,000, 133,000. So you're looking at almost 300,000 contracts there. I mean, basically, I've added this up, and it comes up to be about 400,000 contracts yesterday of options on the mini when you've got the mini itself trading 1.1. So they're not all linked, but a substantial portion of this activity are people pairing their options to their futures contracts. That seems to be a thing. I mean, the rest of us are out here trading 1 or 2 contracts or 5 contracts if we're lucky or aggressive, but these guys are trading options with futures. And I'm thinking I may just start drilling into that over time. I'm sure Charles will have something to say about it. Charles, do you want to join us? Have something to say?
Yeah. So, it's definitely something to consider. It is something that I do in my trading. So nowadays, a lot of times, I used to be a purely futures contract trader. That was it. Just ES and MES, long or short, never mess with anything else. But I now trade options much more frequently. And the reason is because the market has gotten so good at shaking traders out at specific levels. So it'll push to a certain level. It'll start to get support there. You'll think this thing's going to go higher, and then it'll do one more little dip, one more little liquidation lower, and then reverse and go straight up. And the thing that is frustrating about that as a futures trader is there's only really one way to handle that, which is to just use massively wide stops. It's like the only option that you have if you're going to day trade futures is to use massively wide stops. But if you trade with massively wide stops, then a lot of times you take on a huge loss when the trade does go against you, and you have to have so many wins to win back your losses that it ends up
That's
becoming.
how they get you.
Yeah, you just end up treading water, like winning, one big loss. Fuck, now I got to win a bunch to get it back. So what I figured out is if you use options, I like to use options that are dated out, at least 4 or 5 days. If you use options and instead when you're seeing that support, you just buy a call instead of, buying a long contract in the ES, if the market does that final little liquidation, you can stay in the call option because it won't squeeze you out based on price. And so then if later on in the day, the market reverses and comes back up and then has that massive trend day to the upside that you were expecting, you're in your call option, you're feeling good, and you're making lots of money. And so you don't have to enter any trades in the futures. But if you buy that call option and then the market goes against you and it starts to go lower and you're thinking to yourself, well, the option doesn't expire for the next 4 days. I think the market is going to get back above my strike level, within the next few days. You can just short the market in the futures. And so it actually is a really helpful tool to help me, if I'm wrong, get in trades the right direction. Because I'll have my call option that I own, but as the market is going lower, I'll be selling futures. And I'll be selling them sort of without any fear or anxiety, because I know if the market reverses and I get stopped out of my short, I'll start making money off of my call option. And so you can use options as a way to get in trades and not get shaken out over longer time periods. And then you can use futures to hedge against your option position. You can also do the inverse, right? If you get long the futures and the market starts to pull back, you can just buy a put real quick. You know what I mean? And then you're making a little bit of money off your put while that pullback is happening. And then when you feel like the market is making a bottom, you can take profits on your put, and then you don't feel as bad about the losses that you're in on your long trade. Well, that's just little old me, day trader Charles, trading a few contracts at a time. But the institutions do this with, computer programs.
Real volume.
Yeah. And so they know what they own. They know what they own in terms of underlying shares. They know how much the underlying shares that they own affect the indices, and then they trade the indices in the options market to hedge against their underlying portfolios. I mean, it's a mess. But yes, the amount of volume that flows into options is comparable to the ES, especially considering it's extra leverage. It's even more leverage than the futures. So when you see, 500,000 options, the same day you have 1 million contracts on the ES, those options actually represent a larger amount of risk because there's more implied volatility in them,
Absolutely.
It's insane.
Do you see that as a swing trade strategy, or is that still a day trade within the regular trading hours?
So it's generally a swing trade strategy, but sometimes I do it for day trades as well. It's really about the question that I ask myself when I'm entering a trade is this a trade I think I'm going to get shaken out of? But if I did, I'd still want to be in. You know what I mean? So when it's those pivotal levels, like a big look above and fail level, or, a big breakout level, where I know they're going to grind and chop. They may grind and chop for hours, but I know when they break away, they're going to make a big move. I want to get an option, and I want to get, like I said, I always buy options that are at least, 4 or 5 days away. I never buy the stuff that expires the same day or the next day, something like that, because you just lose so much to time decay in those examples. So buying an option that expires 4 or 5 days away, even for a day trade, makes the option a little more expensive, but you lose less to time decay. And I try to buy them as close as I can to in the money. So it comes to, how much I'm willing to risk, because the difference between buying an option and trading a futures contract, in a futures contract, your risk is just wherever your stop is. In an option, it's the cost of the option. It's the premium that you pay. So, and I never sell
that's
options.
What I see. Yeah. Just back to what on the CME. I mean, there's weekly options and an end of month option, which both do healthy amounts of volume. So you can just buy the end of month and figure you'll be in it in a few days.
Oh yeah, for sure. For sure. And it's not showing it on here, but there are options for every single day of the week. So if you go on the actual,
those are CBOE though, aren't they? They're not CME.
Oh, I'm not sure if those are CBOE or CME. Yeah, I don't know.
CBOE. It would be showing it here.
But yeah, on ES and MES, there are daily 0-day expiring options, and you can buy them any day. So you could literally on Wednesday buy for next Wednesday or whatever you want. You know what I mean? So that's what I generally do. But anyway, that's a whole nother can of worms. I'd go over all of that in detail in my Mastery of Markets and Minds workshop if anyone's interested.
Oh, do you?
But you know what I wanted to say real quick while I've still got you on the line, Paul? Thank you for bringing up Labor Day.
Yes.
I never remember when there's 3-day weekends coming until like the Friday before the 3-day weekend, and then I can't make plans.
Yep.
But now you've told me on a Tuesday, I got like 4 or 5 days to figure out what I'm going to do this weekend because I got a 3-day weekend.
Well, there you go. I'm useful after all.
There you go. That's why you guys should tune into this every day and tell your friends.
I'll tell you what the day of the week is. Yes, I will.
Perfect. All right. Well,
and you like my shirt too, right?
I did love your shirt. We haven't gotten any comments in the comment section about it yet, which surprises me a little bit. But yeah,
you have to try, man.
Yeah, I'm not brave enough to go with the colorful Hawaiian shirt.
This is Italian.
Oh,
so there you go. This shows a nightscape.
Yeah,
that's right.
Oh, really? That's cool. Okay.
Yeah, it's a nightscape.
let me jump over. We'll just walk through the charts real quick. Okay, so the way I look at markets is I always see them as an auction process. So that is buyers and sellers competing to try to take the market higher or lower. Right now, it's a two-sided auction. Right now, the market is in balance. It is debating where it wants to go next. Does it want to go higher or does it want to go lower? If you were with us at the beginning of the day yesterday during the Bookmap stream, you remember what I talked about was that there was essentially two scenarios that could play out yesterday. Because we had so much momentum to the upside, we could have either just had this little 2-day balance and then broke higher and continued higher, or we could need to spend some time going sideways in this range before we'll be ready to either break higher or lower. And I said the higher probability was sideways in the range because we had so many days of excess. We had so many days of momentum. You know, we had like 9 trading days of momentum. You don't often get 9 trading days of momentum and then 1 day of balance, right? So what we are getting now is that version of balance with time. And that is the market just going sideways for however long it needs to go sideways before it breaks higher or lower. Now, we clearly have a balance area high, which I've marked on the chart here as 56.61. That's not an exact level. It's just that general area. That is definitely a balance area high. Why? Because when we tried to get above it on Thursday, we instantly ran out of steam and pulled all the way back down. When we tried to get above it on Friday, we ran out of steam and pulled back down. When we tried to get above it, in the overnight, they tried to stay above it. And then when we tried to continue that momentum yesterday, we failed and pulled back down. Okay. So this is definitely a balance area high. This is definitely the make it or break it level. If the market wants to continue to the upside, if they want to revisit the all-time highs, they got to get above 56.61 and get new buying. That's what they didn't do in any of these trips. They didn't get any new buying up there. A little bit in the overnight, the night before last, but other than that, really no buying above that level. So that's why it failed and pulled back in. Well, we don't have a perfect balance area low just yet. I could make a case for the balance area low being somewhere around the overnight low, somewhere around 56.15. As you can see, we ran out of steam in here. When we failed that level, it shot us right back up to the high. So I could make a case that we're near that balance area low right now, or it could be slightly larger range and it could be closer to Thursday's low down here. And so that is really the question I'm asking myself today. I'm expecting that we're going to try to head down there and test, that 56.15 area today during the regular trading hours. And what happens when we get there? Does the market find support and reverse right back up, or do we get new selling? If we get new selling, I'd be looking to come down here and test. Again, it's not an exact level, but somewhere around 55.90. Okay. If we get new selling down there, I do not necessarily feel bearish beyond that, right? There's no reason on earth to think this market needs to fall and make a massive, big, huge pullback. Right now, it is just balancing with time. A pullback when you're balancing with time is just a dip to reverse the market right back up. So I'm not really bearish, bigger picture on the market, unless we get below 55.83 and see new selling down there. My assumption is any move lower today is going to bounce and reverse tomorrow back to the upside. Okay. So I can be bearish intraday for a little bit of a pullback, trying to figure out where the market is going to find support, but I'm not bearish on a swing basis at this point. Okay.
Now, Charles, just looking though, it's slightly different on the NQ. The NQ is actually trading below Thursday's lows right now. If you wanted to take a peek at that,
that's and the NQ is a great way to think about this today. Okay, so the NQ, I would say, got to its balance area low. If it is going to balance with time, if it is going to go sideways in a range, it basically came down there yesterday. So if it was going to balance with time, it should have opened today back inside that balance area. So we still got 8 minutes. Yeah, this does look a little bearish to see. Um, he's shushing his kids, guys. He's not shushing me. Don't be bearish,
Sorry.
Charles. No, that's fine.
You're on camera now, babe. Just see you later, babe. Sorry.
No, it's all good. So yeah, I would say the NQ this morning, pay very close attention to what happens after the market opens. I wouldn't be bearish if we just dipped below the overnight low. So if we just dip below 19, we'll call it 467, that would be no big deal. We could dip down there. But we would need to reverse right back up and head back towards yesterday's point of control, 19,575-ish. We would need to head back there very, very quickly. Any time and any volume brought in below that overnight low today is bearish, because that is the market telling us it needs a pullback with price. That is the market telling us it needs to come back to fill this gap they left behind to about the 19,160s. Okay, so market opens, pushes below the overnight low, gets new selling, bearish, because it needs a pullback with price. Market dips below the overnight low, turns around and comes back up, friggin' bullish, because then guess what it's going to do? Head right back up to that balance area high. Okay, so the NQ will probably be leading the way today and tugging the ES along with it one way or another. It's a good catch, Paul.
No.
So yeah, right now it feels a little bearish, but we'll see what happens at that overnight low. Because remember, with a balance area, they always dip below and above the balance area high and low. So dipping down there means nothing, but new selling is bearish for sure. All right. Any final word from you, Paul?
Well, I do have a dad joke.
Oh, perfect. Hit me with it.
So, how do you double your money?
I don't know. How do you double your money?
You hold it in your hand and you look in a mirror. So there you have it.
Damn, these are good. I like this. All right,
Cool.
Paul. Thank you very much. Thank you, everyone watching, and we will see you tomorrow morning.
All right. Thank you. Bye-bye.
Bye.